Hey, soldiers, a massive wave of vehicle repossessions is coming in 2023. In fact, the car industry itself is convinced of this. Let's talk about how you can avoid being hit by this wave and not waking up one morning, going out and saying, dude, where's my ride? We're also going to discuss how your boy, yes, T-Bone, defeated the repo man. We'll get into that a little later. But I'm doing this video without my face on it. Seems to be that our videos are doing very well when they don't picture me. So, right now we are number 152 with a bullet in the East African country of Djibouti, climbing fast. And so we want to keep that trend up. So we're going to try to experiment here and see if the lack of my ugly face is the secret to better viewership. Let's get right into it. Yeah, they're saying that these repos are coming because, the easy money is over and the rates are rising. Of course, the automobile sector is one of the victims of the aggressive interest rate hikes by the Federal Reserve to crush inflation, which is at the highest point it's been in 40 years. So everything that's interest rate dependent is starting to see a little bit of a slowdown. Now, the car is a unique item for several reasons. We're going to get into that in just a second, how a lot of people are getting trapped between a rock and a hard place as these rates increase. According to experts, this monetary policy, of course, the Fed controls monetary policy. The fiscal policy is controlled by the president and the Congress in the form of tax increases or decreases. But the Fed's policy here lately of raising interest rates has increased the cost of credit, and more particularly, the cost of car loans. Rising interest rates will make consumers reevaluate their decisions before quickly jumping into a car loan, experts at Edmunds.com say. Now, look, we've talked about it ad nauseum here on the Soldiers of Finance channel. Unless you are operating a business, and that business is somehow dependent on a vehicle, you're a truck driver, you're a delivery, you own a delivery van, or you have a business that transports people to and fro to different medical appointments, the airport, what have you, Uber. Unless your vehicle is out there generating income, it's a liability. It's not an asset, okay? If you're just hopping in this vehicle in order to move around town and, maybe go to work in an office somewhere, then yes, the vehicle is a liability. And that's fine. You need a vehicle, okay? Not all of us live in Manhattan, or New York City or Washington, D.C., where they have pretty ubiquitous metro systems. All right, fine. You need a car? You need a car. But there's a proper way to buy a car. And a lot of people didn't observe that, didn't watch the channel, and now they're getting stuck. The average annual percentage rate for financing a new vehicle purchase climbed to 6.3% in October of 2022 compared to 4.2% in October of 2021. This is the highest new vehicle APR since 2019. The average APR for annual percentage rate for a used vehicle purchase climbed to 9.6%. Remember the days when it was more affordable for you to go out and get a pre-owned vehicle? Well, the average interest rate for those vehicles is now almost 10%. And that's compared to 7.4% in October of 2021, the highest since February of 2010. This again, according to Edmunds. Now, guys, I have been an advocate on this channel for quite some time of buying pre-owned vehicles and keeping them. Again, unless you own a business where that car is turned from a liability into a tax benefiting asset that's helping you generate income, look, it's A to B transportation, okay? That's all it is, essentially, guys. And I know some people are going to say, well, I should be able to get what I want in life. I should be. And yes, you absolutely, if you work hard, yes, you should. And you work smart, you should be able to get those things that you enjoy. But please don't mortgage your future for a car, okay? You work your plan right, you'll be able to get whatever you want whenever you want. But don't mortgage your whole future for a car. The last time interest rates were this high, consumers could at least rely on lower vehicle prices and a greater range of inventory to soften the blow. That simply isn't the case in this market. This is according to Jessica Caldwell. She is one of the executive directors over at Edmunds. Take a look at this chart. Okay, so this is compiled by the Federal Reserve. And look at what happened in 2020, okay? When things hit the fan, you know what I'm talking about. Look, vehicle sales just dropped literally off of a cliff. I mean, they went straight down, ultimately ending up in April of 2020 at a depth that had never been seen before, at least not in the history of tracking the numbers, okay? And that's April. But look what happened in May. Things started to come back up. Things started to rise back up again, okay? By September, it was almost where it was. Now, why is this? Let's look over here. June of 2021, it had just came back to a level that hadn't been seen since somewhere in the neighborhood of 2005. And why did that happen? Because interest rates were low and there was a lot of easy money on the street. I know in my area, I saw so many people with new cars. The Charger seemed to be the favorite. People were just riding around in these new cars, and old T-Bone here, you know what he did? He took his car to a car wash and just got it shined up a little bit and, rolled out of there with the same payment I rolled in with, zero. Okay. And didn't think twice. I'm not buying a new car. My car is literally stay on the road until the wheels fall off. I was coming up a major highway. My car started to, I keep them in good order. I'm not a danger out there on the highways, but my car started, just said, hey, look, I'm 22 years old. I'm done. I've got, close to 300,000 miles on me. I'm done. And so I had to pull over and wait for a tow truck. And that was that. Okay. But, I got the most out of that vehicle. Took it to DC every day, 50-mile one-way trip, 100-mile round trip daily in that car for quite some time when I was a lobbyist. All right. So we see what the Fed has to say in terms of tracking those numbers. Look, a lot of people are concerned about this, including Elon Musk. All right, so Elon Musk is concerned about this too. Of course, he is the CEO of a car company. We'll get to what he had to say about it in a minute. Let's talk about this guy who calls himself Car Dealership Guy. He is on Twitter. Apparently, he owns some car dealerships, and he had a string of tweets that Elon ended up responding to. We'll get into his response in a minute. But let's go over the tweets from Car Dealership Guy. This morning, I discovered something extremely alarming happening in the car market, specifically in auto lending. I'm now convinced that there is a massive wave of car repossessions coming in 2023. Here's what I discovered and what no one knows. He goes on to say, every Friday, I conduct a team meeting to recap our week. This morning, one of our general managers opened up DealerTrack, a portal that dealers use to communicate with auto lenders, and highlighted something very convincing. 9 of our lending partners have started waiving open auto stipulations for consumers. Wait, WTF does that even mean? Let me explain using a simple hypothetical scenario. All right, so what that means is a consumer took out an auto loan in 2020, 2021 on an overvalued car. In 2022, the value of the car starts declining. Actually, the value of that car started declining the minute they drove it off of the lot. If the consumer wants to trade the car in, the dealer will decline because the consumer owes more than what the car is worth. As a result, the dealer will ask the consumer to cover the difference, but the consumer can't, causing them what Car Dealership Guy calls a perfect storm. Dealer can't sell consumer a car. consumer can't buy a car. And you guessed it, lender can't finance a car. Everybody loses, said the anonymous CEO. But lender knows that most consumers are stuck in this situation and does the following: waives the open auto stipulation, meaning the lender lets the consumer buy the car knowing that they already have an open auto loan with another bank. Surely the lender knows that consumers that take out a second auto loan are much riskier and have a much higher risk of default, right? Yes, but the lender does it because they know that the consumer will default on the other car. Okay, so this is what is going to lead to car dealership guys saying this is a scenario that is being set up to lead to a lot of repossessions. This is kind of like what happened with the loans that were given to people, no income, no job, mortgages that led to the Great Recession of 2007, 2008. All right, so let's see. He says that the only way lenders can finance cars and dealers can put cars on the road is through this scenario of, this little trick, this little scheme that they're doing. However, this means tons of repossessions ahead. Elon Musk, Tesla's CEO, and celebrity investor Cathie Wood agree that disaster is coming. They both responded to car dealership guy's thread, warning of this potentially explosive situation. Cathie Wood said she's been concerned the impact of declining residual values on the $1 trillion auto loan market. Most of these loans back gas-powered vehicles. At Guy Dealership explains that this crisis is underway. The consumer preference shift toward EVs will exacerbate the crisis. Hey, I see her logic there, but those EVs need to come down in price because a lot of consumers are locked out of that right now. And a lot of other things need to happen in the EV market in terms of range, reliability, on and on and on. Anyway, Elon Musk agreed, potentially the biggest financial crisis that, ever, he's saying. All right, so continue to monitor that. It's getting real crazy out there. Now, if you want to be in a position where you actually avoid getting stuck in that type of situation where you're looking at a repossession, all right, well, you gotta exercise some fiscal discipline. Industry analysts worry the trend is only going to continue into 2023. The average monthly payment for a new car is up 26% since 2019 to $718 a month. And that's more than my rent was when I first moved out. And nearly 1 in 6 new car buyers is spending more than $1,000 a month on vehicles. Other costs associated with owning a car have also shot up, including insurance, gas, and repairs. Okay, listen, guys, it's just a car. All right, don't mortgage your future for a car. This thing is getting so pervasive that Jeremy Cross, he's the president of International Recovery Systems in Pennsylvania, he's saying he can't find enough repo men to meet the demand. All right, so how'd I beat the repo man? Well, this was, first of all, back in the day. Don't try to do this today. This was when I first became independent and was working 3 jobs, but I still couldn't make ends meet. And I had my apartment and I had a car. And that car, I couldn't pay for the car. It was difficult. I was always 3 months behind on that car. And so in any event, when I bought the car, the address they had was my mother's house because that's where I was living at the time. And then maybe about 2 months after that, I moved into my own place, which was all the way across town. And so the address that they had for my for where I lived was nowhere near, it was in a totally different part of the city, okay? The address they had for where I worked was in Silver Spring, and I had changed jobs, and I was in Baltimore now, and I parked in a garage in the daytime when I went to work, so, I wasn't on the street. I was always 3 months behind. I eventually caught up. But it was tough, okay, because I was just starting out. I did catch up and I did make good with that car payment. Now, why do I say don't try this today? Well, because when I was a volunteer firefighter, a guy that I worked with came in and his car had all of these devices on it. And I said, hey, Joe, what are all those, what are they, cameras? What is that? And he said, hey, I just got a new job. And what I do is in the morning, I get up and I just drive around the Beltway. And these cameras, they just take pictures of license plates. And if any license plate is associated with a car that is 4 months or more behind on the payment, then it will get a hit. It will tell me. I'll follow the car, tell them where they're working at. They're usually parking in some parking lot, and then I will dispatch a repo man tow truck. They'll come and get the car, and you'll come out to go to lunch, and I guess you'll have to catch the bus because your car will be gone. So do not try T-Bone's method of avoiding the repo man. That worked in the early 90s. It will not work now.